Gasoline prices have soared across the US, and parts of California now have some of the highest.
As you can see, $6.31 a gallon, where I remember it being $2.50 or even $3. I used to put $38 to fill my tank up. Now it's about between $70 and $90.
Russia's attack on Ukraine, inflation and supply bottlenecks driving up vehicle prices are all combining to make the cost of driving painful for many.
It's really kind of unprecedented, that the crazy economic news that we've been getting just over the last few months, on top of the COVID experience that we've all been through over the last 2 years.
And it's about to become more of a burden, with the US central bank poised to raise interest rates this Wednesday for the first time in more than 3 years, partly to wean the economy off COVID-19 support and to rein in the highest inflation for at least 40 years.
The Federal Reserve's benchmark interest rate has a direct impact on how much banks charge businesses and consumers for borrowing. But it also has a knock-on effect on auto loans. And just as mortgage rates have been at all-time lows during the pandemic, the cost of financing a car purchase has also been at all-time lows.
Experts say the impact of higher rates on the auto industry will be hard to gauge. The supply crunch for critical components has dented the profits of manufacturers such as Toyota. But higher prices for vehicles have also helped car dealers.
We see that in 2021, the industry had more revenue of just transaction price times sales than it did in 2019. And that's with almost 2 million fewer vehicles sold.
And other sectors such as the real estate market have remained buoyant, even as those ultra-low lending rates begin to climb in anticipation of the Fed's rate hike. Owen, Fairclough, CGTN, Washington.